If you're running a UK shipping company, there's one single tax form that could be the difference between volatile, unpredictable profits and stable, manageable tax bills. The thing is, so many businesses still aren't aware of its full potential, especially now that the rules have had a major shakeup for 2026. Getting this right is no longer just a nice-to-have, it's pretty much essential for smart financial planning.
Now, before we jump in, you should know where this information is coming from. This entire guide was put together by the specialist tax advisors over at Pro Tax Accountant. These folks are genuine experts in complex industries like shipping, so you can be sure the advice is spot on. All right, so here's a quick look at what we're going to cover. We'll start with the big question: what exactly is tonnage tax? Then we'll get into who can actually qualify for it and how it works. From there, we'll look at the key document, Form CT600F, why 2026 is such a massive year for this, and finally, how you can get the right expert help. Okay, first things first, let's get the big picture. Form CT600F isn't just another bit of HMRC paperwork. Think of it more like your membership card to an exclusive club, a club designed specifically for UK shipping, with some really serious financial benefits. So you might be wondering, why does this club even exist? Well, to get that, we have to rewind to the 1990s. The UK's merchant fleet was in real trouble, with companies literally sailing away to countries with better tax systems. So in 2000, the government brought in tonnage tax to lure them back. Fast forward to today, and the whole thing has been given a massive overhaul to make the UK a top-tier global maritime hub. So what is it, really? Well, put simply, it's a completely different way to pay your tax. Instead of paying corporation tax on your actual profits, which can go up and down like the tide, you choose to pay tax on a notional profit. And that number isn't based on your sales. It's calculated purely on the size of your fleet. This is the real game changer. It gives you incredible financial stability. Let's just put this side by side. You've got your standard corporation tax, right? It's volatile, it can be a headache to calculate, and it makes planning for the future really tricky. Then you have tonnage tax. Predictable, simple, and stable. Honestly, for an industry like shipping, the difference is like trying to navigate in a storm versus sailing on a calm, clear day. It's night and day. It all sounds pretty great, doesn't it? But, as you'd expect, not just anyone can join this club. The entry requirements are very, very specific, and it's vital you know if you tick the boxes before you go any further. So there are three main hurdles for a company. 1, you've got to be liable for UK corporation tax. 2, you have to operate specific qualifying ships that are actually managed from within the UK. And 3, and you really need to hear this because it catches a lot of people out, if you're part of a larger group, all the qualifying companies in that group have to join together. It's an all-or-nothing deal. And of course, your ships themselves have to make the cut. They need to be seagoing vessels, over 100 gross tons, and used for commercial transport, like carrying cargo or passengers. But just as important is the list of what's excluded. Things like fishing boats, pleasure yachts, and offshore rigs, they don't qualify. Knowing what's out is just as critical as knowing what's in. Now, here is a really crucial point. Membership in this club isn't a free ride. It comes with a very important responsibility. You can think of it as the price of admission, a way of giving back and investing in the UK's maritime future. It's called the Minimum Training Obligation, or MTO for short, and it's absolutely non-negotiable. Basically, you have a choice. You either commit to training a certain number of new officer cadets each year, or you make a payment into a central training fund instead. It's a core part of the whole system, designed to boost the UK's pool of skilled maritime professionals. Okay, so let's say you qualify and you're happy with a training commitment. The next big question is, how is this tax actually calculated? You might be bracing yourself for some horribly complex formula, but honestly, it's refreshingly straightforward. It all comes down to this one simple table from HMRC. Your entire tonnage tax profit is worked out using these fixed daily rates, which are based on the net tonnage of each ship you operate. You simply calculate that paper profit for each ship, for each day it's in use, and that's it. That becomes your taxable profit for the year. Simple as that. So you've confirmed you qualify, you can see the huge benefits, and you get how the maths works. How do you make it all official? Well, this brings us to the most important piece of paper in this whole process. And here it is, Form CT600F. It might just look like any other tax form, but this is your official key to the tonnage tax regime.
It's a mandatory attachment to your main company tax return, and it's where you formally declare everything to HMRC. If you're in the regime, filing this isn't optional, it's a must. Let's just quickly break the form down. It's split into 4 main sections. Part 1 is where you confirm, yes, I'm eligible. Part 2 is for specific training allowance. Part 3 is interesting. You still have to disclose your actual profits, mainly for transparency. And then Part 4, well, that's the main event. That's where you do the tonnage calculation that decides your final tax bill. Okay, stay with me, because this next part is absolutely crucial, and it affects nearly every shipping business in the UK. Why are we talking about this so urgently right now in 2026? Well, because the rules of the game have been completely rewritten. A whole host of recent reforms have made the tonnage tax regime more flexible, more accessible, and frankly, more attractive than it has ever been. So what are these big changes that you need to know about? You'll want to hear this part. First, and this is a massive shift, third-party ship managers are now allowed in. That opens the door to a whole new sector of the industry. Second, the lock-in period, how long you have to stay in the regime, has been cut from 10 years down to a more manageable 8. And for anyone leasing ships, the capital allowance limit has been boosted to a huge £200 million. It's a huge incentive. So here's the pro tip, the key takeaway from all this. If you looked at tonnage tax a few years back and thought, nah, not for me, that decision is now completely out of date. The landscape has changed so much that it is absolutely worth taking a fresh look in 2026. Look, navigating all these new rules and making the right call for your company, it really does require specialist knowledge. So what's the best way to move forward and make sure you get it right?
Right, before we finish, a very quick but very important disclaimer. Please remember the information we've discussed here is for general guidance only. This is a complex area of tax, so you should never, ever rely on it alone to make financial decisions. Always speak to a professional advisor first.
To find out if the tonnage tax regime could be the right strategic move for your company, the best thing you can do is have a chat with the experts. The team at ProTax Accountant lives and breathes this stuff. You can get in touch with them directly on WhatsApp or by phone at 07985 689912, or you can just pop an email over to info@protaxaccountant.co.uk. And if you'd like to read through all this in more detail, you can find the full article on the ProTax Accountant blog. The address is right there on your screen, protaxaccountant.co.uk/post/form CT600F. Thanks so much for watching, and don't forget to subscribe to the ProTax Accountant channel for more expert guides just like this one.